Good afternoon, traders. This is Tony D from the Easymarkets dealing room in Sydney. Final update for the week. We do have NFP Friday that's on us now, and this is going to be a big one because the market is so heavily long the US dollars this month, and the first real turning point that could be coming for the US dollar would be a weakening of the market's perceived view of how strong unemployment number is. So if we do see a drop in unemployment tonight, chances of a big move against the US dollar is very real. If it remains steady and strong, the US dollar is going to continue on its merry way. But if you're looking at the dollar index there, we are up at 95 and well, near 95, and that is so far held its first test. And if it continues to maintain a little bit of resistance there, then it's going to be harder for us to see the market push longer on the US dollar, especially against pairs like the euro and dollar yen, which are showing reversal patterns right now. And if you're looking at some of the smaller crosses, Aussie dollar's holding up well, and so is starting to stabilize and better price action on the pound as well. So there is ability here for the US dollar to start to go lower in the short term if we get a little bit of catalyst. Yeah, it doesn't usually, it can come just from the market itself, but it would help to have a catalyst, and a little bit weaker data would help. Now the data is expected to be 190,000. It's been forecasted around 200,000 for most of this year, and it hasn't really missed too much in terms of expectations. Last month, you remember the number headline came in a little weaker, but the unemployment rate dropped to 3.9%, which is a multi-year low, and it's really close to that 3.8% that the market did get to in 2000, and that would be a big number there for the market to react to if we got down even further. It's expected to remain at 3.9%, but if it was a tick higher, that would cause a little concern. The market in general is focusing on the average hourly earnings though these days, and if we see that start to creep a little bit higher, that's what the Fed's looking for in terms of wage inflation, and that could be part of a story as well that could lead the US dollar to maintain strength if you see that coming through. So don't just look at the headline, look at the other two numbers that come out with it, so average hourly earnings and the unemployment rate, to form your basis of which way the US dollar is going to go, although you will see initial reaction in straight away based upon the headline figure. And if you're looking at the ADP number, which is the preview number, came out on Wednesday, was a little weaker than expected. Came out at 178,000 versus 191. So the expectations aren't for too much movement, but if we do see it, given where we are position-wise, that's where you can start to see bigger moves. Now the euro dollar last night had a second day of rally and did get as high as 117.20. Has been under a little bit more pressure so far today, and you're seeing a little bit of profit taking so far in the Asian session, and the dollar yen has back above 109, but really this is nothing too much driving this, and nothing to be too concerned about. There's no new Italian news on the horizon just yet. You're probably going to get a lot of Italian news over the weekend though, so if you're worried about some of the big moves that are happening in the market and the big stories that can shape the market, then over the weekend it is dangerous to carry trades into the weekend, and you may want to limit your exposure. If you are worried about the other big story that's developing as well, which is the trade tariffs that's been put on Europe and Canada, then you may want to be focused a little bit on not trading the Canadian dollar in the very short term, just until we see the clarity on how they can get out of those tariffs or what the next move is. NAFTA negotiations seem to be a big part of it, and while the NAFTA negotiations are on, then the tariffs are going to remain. So there could be a little bit of a delay here and a bit more of a headwind going forward, but it depends on how aggressive Canada's responsive, I suppose, and along with Mexico's response, how aggressive they are, and European Union, what retaliation they do as well, into how the stocks react and how sentiment in the market reacts. But at the moment, you saw the initial reaction was stocks down and a slightly stronger US dollar, but you haven't seen too much follow through or too much fear that these are not surprise tariffs. These have been talked about for a month. These countries were given a 1-month extension before the implementation, but they haven't negotiated a deal that with the US has found acceptable just yet. So we are in the midst of what could be tit for tat retaliation measures go against each other. Um, the big one for Europe and for Germany in particular would be if tariffs were to be extended to automobiles, and that is what's currently being investigated by America. So that's the next big potential headline that you're going to be watching. If there was to be tariffs on BMW and Mercedes, that would be the stoking of a much bigger trade conflict between the European Union and America. But right now that hasn't come on, and so we'll see. We'll see how that develops in the next week. Next week will be much more focused on those topics, especially if the Italian fears subside. Alright guys, if you want to have a chat about some of the other pairs, we see there's a lot of crosses that are behaving very interestingly. A lot of the Euro crosses are showing reversal patterns, and in particular the big one that we watch here is the Aussie Kiwi. Has had a nice pullback in its uptrend towards the 107.50 supports. Now come back towards that level, that's where the uptrend may resume, so it's a good level to be watching. But if you want to have a chat about some of these other pairs, please come through on the numbers below. If you're not a member of the Easy Markets Dealing Room, you can sign up and get a dealer like myself to assist you with some of the market events and news releases, and also just the big stories as they develop and the best way to be approaching the markets.